Buying a home is a major accomplishment, and for a lot of people, it's the ultimate goal. But home ownership, the buying process, it's all very expensive, and not only because you're spending hundreds of thousands of dollars. So in this video, we are going to look at some different ways that you can save money when buying a house. I like to get right into the tips as soon as possible. So the first way you can save money when buying a house is to increase your credit score. And one good thing about home ownership is that you do not need perfect credit or even good credit for that matter. You can get an FHA home loan with a score as low as 580. Many conventional loans only require a score of 620, but even though a lender will extend you financing, it definitely pays to increase your score before applying. Now, your credit score not only impacts whether you're able to qualify for the loan, it also impacts your interest rate, and typically applicants with the highest scores, they qualify for the better rates, and the lower your rate, the lower your monthly payment. And just to briefly illustrate how rates impact monthly payments and overall cost, if you were to buy a $200,000 house at 4% interest, assuming a 30-year fixed rate term, you would probably pay about $955 a month, excluding taxes and insurance. And over the course of 30 years, you'll pay about $343,000 for the total cost of the house, which includes what you pay in interest. Now, a 4% interest rate is not bad at all, but let's say you had a lower credit score and the best your lender could do is offer you 5%, which is a whole percentage point more. In this scenario, instead of paying $955 a month, your monthly payment would then jump to $1,074 a month. That is a $100 increase every single month. And on top of that, you will end up paying an extra $40,000 for the overall cost of the property over 30 years. So when you look at it in terms like that, you can really see how important it is to wait until you have a high credit score and then apply for a mortgage. Another thing that is so important if you want to save money when buying a house is to compare mortgage lenders. And for those who might be new to home buying, you may think that all lender quotes are going to be the same and it doesn't matter where you go, but that could not be further from the truth. You can go to this lender down the street and they quote you a rate of like 4%, but if you go to this lender over here, they may give you a rate of 3.7%. Now, in the aforementioned illustration, we use an interest rate difference of 1%, and you saw how that impacts the loan over the course of 30 years, but you don't have to have an increase of 1% to see a significant increase in what you pay for a house. Even the slightest decrease in rate can make a difference, and if we use the same price point and term from the illustration I just gave, if one lender quotes you 4% and another lender quotes you 3.8%, if you go with the lower interest rate, you will save about $25 a month and end up spending about $8,000 less in interest over 30 years. So comparison shopping is so important, and my recommendation is get quotes from at least 3 to 4 mortgage lenders. And another important thing to keep in mind is that you want to rate shop within like a 14-day to 30-day window. This way, all those inquiries will count as one inquiry on your credit report. Another tip is don't be afraid to ask the seller for stuff. As the buyer, you have a lot of negotiating power, especially if you are dealing with a motivated seller. If this person is eager and ready to move and they don't have any other offers on the table, they might be willing to give you anything you ask for. I know, because that was us just 4 years ago. The last place we owned, it took 4 years for us to sell that townhouse, and not because it was a bad property. Actually, we got a lot of positive feedback from different realtors and even different buyers. The problem was that we purchased the house in 2006 when home prices in our area had skyrocketed. So by the time we were ready to sell, we were about $10,000 to $15,000 over what similar properties in the area were selling for. So of course, somebody comes through and they look at your property and their property, same layout, same square footage, but their property is cheaper. A lot of times they're gonna go over there. And when we finally did find a buyer, I think he could smell our desperation. Actually, I'm pretty sure of it because, he knew how long the property had been on the market. And he used that to his advantage. Not only did he offer thousands under our asking price, but he took the washing machine, he took the dryer, he took the fridge, he took the lawnmower, he took all our outdoor gardening stuff. He even took our wood, which I mean, who does that? We had a wood burning fireplace, and outside on the deck, we had a bunch of wood stacked that we had purchased, because it was during the winter that we were selling. And yeah, in his purchase agreement, he put in there that he wanted the wood too. And I was like, who takes somebody's wood? But at that point, I was like, you know what? If that's what it's gonna take for you to buy this house, that is fine. You could take it. I will even chop you some more. He even tried to get a new HVAC system out of us, and not because our system was broken, but just because it had a little age. But no, we weren't going there. He wasn't getting that, and the deal still went through. So I have a funny feeling he was just trying to see what he could get, and yeah, he ended up getting a lot. When buying a house, it is also so important that you prepare for closing costs. And this is an expense that I think some home buyers, especially new home buyers, overlook. Even when some people go into a home purchase expecting to pay a down payment, sometimes they just completely forget about closing costs. And these are lender and third-party fees that buyers are responsible for. And it's also important to note that closing costs are not the same across the board. They can also vary from lender to lender because different banks will charge different amounts for certain services. So again, that is the importance of comparison shopping. And the good thing about closing costs is that many mortgage programs will allow the seller to pay a percentage of a buyer's closing costs. And a lot of times, some banks will even allow you to wrap the closing costs into your mortgage balance if you have enough equity. And if you're really short on cash, some lenders will even pay the closing costs on your behalf. But usually with this approach, in order to do this, you will have to agree to a higher interest rate. So, on one hand, it's kind of good because you get to keep some of your cash, but on the other hand, you're going to end up paying more in the long run because you're spreading the closing costs over 30 years or you're paying a higher interest rate. So it's one of those things where you really just have to juggle the numbers and make a call based on what you feel is best. Another way you can save money is to spend less than your pre-approved amount. And if you get pre-approved for a mortgage, which I do recommend, it is so important that you take this number with a grain of salt. This is the maximum you are allowed to spend on a property. It doesn't mean that you have to spend this much, and to be honest with you, it doesn't even mean that you can afford to spend this amount. You have to be realistic about your budget and what you can afford, because when a lender determines your pre-approval amount for a mortgage, they base this number off of your income and expenses that are on your credit report. And as we all know, we often have expenses that are not listed on our credit report. These expenses can include what you pay in insurance every month, what you pay for daycare, your transportation costs, your food costs, and a lot of other things, maybe your cell phone. So what you can actually afford to spend on a house might be less than your pre-approval amount. So if you get a big number back from your lender, don't get overly excited. It's always best to spend less than that amount. That way you have a little bit of a cushion that allows you to continue to put money in savings and you don't end up house poor. The next tip is a little off subject, but I think it's so important that it deserves a mention. It's also best that you do not drain your savings account to buy a house. Now, home ownership, it is expensive, and it's one of those things where, you don't have a landlord anymore. So when things break, you can't call up anybody to come in and fix it. You have to find your own repairman and you have to pay this person. And on top of that, life also happens and it can take an unexpected turn at any time. I've known people who close on their homes and within a few months find themselves out of work and searching for new employment. So the point is, you always want to have a backup plan, and the worst thing you can do is completely drain your savings account for a home purchase. And I know that's probably hard, because if you've been saving years for your down payment and your closing costs, once you have enough money, naturally you're eager to start the process. But if you can hold out a little while longer, your finances will thank you, because without any type of cash reserve, it really only takes one emergency to drive you into debt. So even though you want to save money for your home purchase, you also want to maintain some type of emergency cushion, even if it's only 2 or 3 months worth of mortgage payments, and then gradually add to that. Another way you can save money when buying a home is to purchase a home warranty. This is something that I didn't even know existed until we purchased our first home back in 2006. Our seller was nice enough to include a home warranty as an incentive, and let me tell you, over the past years we have saved so much money with this program. Basically, with a home warranty, you will pay about $400 to $600 a year depending on the company, and if something in the house breaks, you call the warranty company and they will send a local technician to your house. When this technician arrives, you will then pay a flat service fee, which can range from $75 to $100, and the technician, they will fix the broken item, and if they can't fix it, they will replace it. Now, it doesn't cover everything, but it does cover a lot, and basically you can call them if you're having problems with your electrical, your plumbing, your appliances, or maybe your HVAC system. The first place we bought back in 2006 was nearly 25 years old, so as you can probably imagine, we were using that warranty at least 2 or 3 times a year, and it definitely paid off. Throughout the time living in that house, we were able to get a new thermostat, a new air conditioning compressor, we got a new garbage disposal, not to mention they came out several times to take care of other issues that popped up with the plumbing and the appliances. So this is something I definitely recommend, whether you're buying your first home or you're buying your second and third house, because as things come up, that's less money you have to spend out of pocket on repairs. So there you have it. That's my list of simple ways that you can save money when buying a house. I really hope that you enjoyed this video, and if you did, please give me a thumbs up. And on this channel, we talk a lot about money, different ways that you can save money, but also how you can just improve your entire financial picture. So if you like videos like this and you want to see more, do me a favor and hit the subscribe button below. I post every weekend and sometimes during the week. So thank you again for watching, and I'll see you in a few days.